Hello and welcome back to Explain the Charts. Today's video will cover the NZDUSD pair, providing a comprehensive analysis of the market's current status and its potential movements. Let's begin by reviewing recent market news. The Reserve Bank of New Zealand recently cut interest rates, and the current rate is 4.25%. This decision has caused an increase in the NZDUSD exchange rate. As we can see from the daily chart, this rate cut caused a temporary surge in NZDUSD, with a spike in volume that reflects the market's strong reaction. However, we must be cautious and look at other information on the charts, because this surge was only temporary. Many analysts predict further rate cuts in the near future, which might trigger volatility in the exchange rate. We can observe from the 1-hour chart a series of small bullish candles, suggesting the overall trend is still positive. The significant volume increase during the RBNZ announcement on November 26 is worth noting. However, price movement since then has been slow and sideways, indicating indecision in the market. Now, let's switch to the 15-minute chart. Here, we can pinpoint some strong support and resistance levels which we see on the larger timeframes. We've noticed multiple instances of price action bouncing off these levels, suggesting that the trading range has been defined. This is confirmed by the consolidation pattern that has been established following the initial rate cut-related surge. Zooming in on the recent price action on the 1-hour chart, it appears the NZDUSD is consolidating. This consolidation phase typically precedes a major price move. Whether this is a bullish or bearish breakout remains to be seen. Observing the volume levels can provide additional insights into the strength or weakness of the current consolidation. Considering the current market sentiment and the recent news, there are both bullish and bearish scenarios for NZDUSD. The bullish case is supported by the continued expectation of further easing by the RBNZ and a potential weakening of the US dollar. However, the bearish case is presented by other factors. Let's look at these factors. A key short-term resistance level to watch for is 0.615. A sustained break above this level would confirm a bullish trend, and a decisive move above the 0.62 mark would significantly strengthen that trend. If the price breaks below 0.605, it could signal a bearish reversal and a return to the consolidation pattern. In the long term, further news about U.S. economic performance, particularly inflation numbers and potential interest rate decisions by the Federal Reserve, will influence NZDUSD movement significantly. The likelihood of a sustained bullish trend depends on ongoing rate cuts from the RBNZ exceeding market expectations. Important price levels to monitor include 0.605 and 0.615 as short-term support and resistance. A decisive break above 0.615 could trigger a move to 0.62, while a break below 0.605 could lead to further consolidation. Long-term predictions depend on the Fed's actions and the RBNZ's future policy choices. To summarize, current events point towards continued volatility. The market awaits further information on the U.S. inflation data and the Federal Reserve's response, which will heavily influence the direction of the NZDUSD. The RBNZ's future actions and the market's reaction to them will also be crucial. Stay tuned and keep an eye on the key price levels discussed.